Frasers Centrepoint Trust, 1.17 billion deal. Should I take part in it? I thought I should give my 2 cents because I also see other people sharing their train of thoughts on this deal. Okay, what's going through my mind is simply this sentence: price is what I pay, value is what we get. So I kept this in mind when I processed this deal. The whole deal has 4 items. First, the acquisition price of 375.2 million. There's also the acquisition related costs and expenses of 1.4 million. And there's another acquisition fee of 11.3 million. And there is this NG Trust bank loan of 785 million. So one of the key things of this deal is this last statement: the bank loans owned by NG Trust to certain financial institutions of approximately 785 million. For the avoidance of doubt, the NG Trust bank loans will not be discharged by NG Trust under the acquisition. Means that after FCT acquires the south wing of North Point City, the bank loan still remains. So if that's the case, how will my FCT pay the acquisition price and the related costs? We know that there's an EFR, so-called equity fundraising of 400 million, 200 million private placement. It was successful, and right now we are in the phase of another 200 million preferential offering. So that's why I wanted to record this video, just to jot down and share with you what are my train of thoughts. Plus, there's also a potential issuance of perpetual securities of 200 million, and with that is coming with an assumed coupon rate of 4.2% to pay down debt levels. In the event that the perpetual securities are not issued, the acquisition will still proceed with the funds from the EFR and debt financing. With the perpetual securities, leverage ratio will be 39.8. Without it, the leverage ratio will be 42.2. But here's one key thing I still can't get over. The takeover of the south wing still has the 785 bank loan component, which I didn't see its cost of debt. Maybe did I miss out? I find it crucial so that I can compare it to its value. That is, how much am I getting in return for owning this asset? How do I assess the value? First is its property yield of 4.5%. That's it. Wait, what about the other points like transport note and stuff? You can't leave me hanging. Those other points are valid and my REIT manager will execute it. But the key thing that I shared early on at the start of this video, for the price paid, what is the value? So the price paid is the cost of that 785 million loan to continue holding South Wing. That information lacks the cost of that, which perhaps during the EGM, I need to clarify. What's the value? I'm earning an MPI of 4.5%. What do you think is the cost of this 785 million loan? Is it going to be 3.3%, 4%, or 5%? And in fact, are you subscribing?